All right, let's jump right into this explainer. Today, we're unpacking the SASB climate change adaptation metrics specifically for the home builders industry. Look, if you follow real estate development or sustainability reporting, you already know the landscape is shifting under our feet, literally. We're going to look directly at the International Sustainability Standards Board's guidance and figure out exactly how home builders are required to quantify and report their resilience against our changing climate.
But before we get into the nitty-gritty of the reporting frameworks and the actual numbers, we have to talk about the very real, visceral threat climate change poses to real estate. The SASB standard points out something incredibly important, right in its topic summary. They basically say that ignoring these risks, it can lead to completely uninsurable lots and rapidly sinking land values. We're not just talking about environmental impact here, we're talking about the fundamental financial viability of building homes in areas that might soon be underwater, whether that's literally or financially. So here's our roadmap for today. We're hitting 5 key areas. 1. Climate risk in home building. 2. The climate adaptation metrics. 3. Defining 100-year flood zones. 4. Analyzing climate risk exposure. And 5. Mitigation and adaptation strategies. Let's get to it.
Section 1. Climate risk in home building. Let's establish exactly what's at stake here.
Think about it. When home builders select markets to develop communities, they're making a massive, decades-long bet on that specific piece of land. The standard really highlights that extreme weather and water scarcity don't just, damage a few roofs. They fundamentally threaten long-term development. If a builder is operating in a floodplain or a coastal region that's exposed to extreme weather, they're staring down soaring flood insurance rates. And let's not forget, government-subsidized flood insurance programs are dealing with their own financial instability right now. Plus, it's not just about storms. Builders in water-stressed regions might literally watch their land value plummet simply because they can't even secure the permits to build in the first place.
Moving on to Section 2, the climate adaptation metrics. How does the standard actually ask you to measure this stuff?
Well, the standard lays out 2 core metrics that work hand in hand. First up, we've got IFHB 420A.1. This is a purely quantitative metric, asking for the absolute number of your lots located in 100-year flood zones. Then, right beside it is IFHB 420A.2. This is the qualitative side, a discussion and analysis metric. It requires a detailed description of your climate change risk exposure, your systematic portfolio exposure, and your strategies for actually mitigating those risks. Put them together and you get a pretty complete picture of a builder's true climate resilience.
Which brings us to Section 3, defining 100-year flood zones. We need to clear up a widely misunderstood term in real estate.
Okay, so the first metric requires builders to disclose the number of controlled lots in a 100-year flood zone. But what does that actually mean in practice? Well, the standard defines these zones as land areas subject to a 1% or greater chance of flooding in any given year. That includes coastal floodplains, areas along major rivers, and even low-lying areas that are just prone to ponding. And hey, pay close attention to the term controlled lots. You have to report all of them, whether you outright own them or they're just contractually available to you through option contracts. You can't just leave those out.
So here is the absolutely crucial point. A 100-year designation, it doesn't mean a flood happens once a century. It actually translates to a 1% or greater chance of flooding in a single year. It's technically known as the 1% annual exceedance probability flood. And why is this such a big deal? Because over the lifespan of a standard 30-year mortgage, that 1% annual risk compounds significantly. That reality fundamentally changes how homebuyers, insurers, and investors view the long-term financial risk of that property. On top of that, climate maps, they aren't static. They're a moving target. The standard explicitly points out that home builders need to consider disclosing the potential impact of 100-year flood zones expanding into their controlled lots due to ongoing map reclassifications. We have to remember, if climate change shifts these maps, a lot that looks perfectly safe on paper today might be classified as a flood zone tomorrow. That would instantly and severely impact your active selling communities.
All right, Section 4, analyzing climate risk exposure. Because counting lots in flood zones is really just the baseline, your climate change risk exposure analysis has to systematically follow a few distinct steps to give stakeholders true transparency. First, identify the significant risks and opportunities. This could be water availability, extreme weather events, changing building regulations, or how all of this impacts the home permitting process. Second, you have to discuss the timeline. When do you expect these risks to actually hit? Are we talking a 5-year horizon, or are we looking 50 years down the road?
And for the third step, you can't just guess what the future holds.
To ground your analysis, the standard actually requires using established global models. Specifically, it points you toward applying scenarios from the International Energy Agency, like their new policies, sustainable development, or current policies scenarios. Running your entire portfolio through these specific lenses, that's what provides a standardized, objective view of your systematic risk.
Finally, Section 5, Mitigation and Adaptation Strategies. Because identifying the problem is really only half the battle. Under the qualitative metric, builders have to describe how they assess, monitor, and manage these impacts. Now, SASB makes a very distinct categorization here. They separate alleviating a risk entirely versus adapting your product to withstand it. Grasping the difference between these two is absolutely key to a compliant disclosure.
Let's break that down a bit. Alleviation strategies, they're basically all about avoidance and timing. This means you're incorporating climate and weather models right into your site selection process so you can avoid water scarcity entirely. It also means strategically timing your lot acquisitions, your permitting, and sales. It could even mean using specific clauses in your purchase agreements to shield the company from risk. Now, adaptation, on the other hand, means changing the physical product itself. If you're building in a risky area, adaptation involves changing the lot design, engineering the home for true physical resiliency, building in contingency plans, and maximizing the energy and water efficiency of the final home.
Let's look at one final conceptual breakdown to see how this builds your overall strategy. The standard dictates that your reporting must clearly contrast your physical risk management against your financial risk management. Physical risk management means taking tangible action in the dirt, stuff like practicing floodplain avoidance or designing a house to survive a hurricane. Financial risk management, though, that's about using financial tools to hedge your bets. We're talking about utilizing specific insurance policies to cover potential losses, or structuring your land pipeline using option contracts rather than outright buying the lots. That way, you have an out. You can walk away if the climate risks suddenly become too severe.
So I want to leave you with this provocative thought. When we sit here talking about 1% annual risks and option contracts and IEA climate scenarios, it can feel a little abstract, right? But ask yourself, if climate change maps were redrawn tomorrow morning, what percentage of your active selling communities would instantly lose their land value or their insurability? It's a huge question, but by rigorously tracking these SASB climate change adaptation metrics, by mapping out those 100-year flood zones and actively planning both your alleviation and adaptation strategies, homebuilders can ensure their portfolios actually remain resilient, no matter how those maps change in the future.